Looking at the real seasonally adjusted figures, the trend is unfortunately worsening. Roland Kläger, Raiffeisen Bank on unemployment in Switzerland. The unemployment rate in Switzerland has been trending higher than usual, with December 2015 seeing the highest level of unemployment in more than 5 years. Since then, it has been decreasing steadily, and unemployment figures released this morning saw a further fall to 3.5% in April from 3.6% in March, which was in line with market expectations. Do you believe this reflects the current economic health of Switzerland, or are the figures a misrepresentation?
Yes, this is unfortunately not a real trend in the Swiss labor market. The current improvement is actually all based on seasonal factors, and the unemployment rate always peaks in the first quarter and drops towards summer. And the major factor for that is obviously the construction sector, where you have much higher employment when the weather gets warmer. And now looking at the real seasonally adjusted figures, the trend is unfortunately worsening again even. This rate is currently at 3.5%, and we expect it to rise to around 3.7% towards year end. So no improvement on the labor market at all, actually, in Switzerland.
Switzerland's GDP data saw an increase of 0.4% in the December quarter of 2015. This data followed a revised contraction of 0.1% in the previous quarter. Do you think the next GDP figures will show growth or contraction, and why?
Q1 is likely to show growth again. I mean, private consumption is still a major pillar of growth, not least based on still very high migration. And also growth contribution from foreign trade is likely to be positive again. The European figures we have already for Q1, and they confirm actually quite a robust growth, and that usually helps also Swiss exporters. And that's all in all means to us that quarterly growth should come in at around 0.2-0.3% in Q1.
Inflation in Switzerland fell 0.4% year-on-year in April, which was the lowest drop since December 2014. As the cost of food and recreation and culture bounced back, prices of clothing accelerated, and energy and transport fell at a slower pace due to higher oil prices. How do you think inflation figures for May will fare?
I mean, when it comes to inflation, a lot currently obviously depends on the oil prices, and if they remain well above this $40 barrel where it is now, that actually should support slightly higher inflation rates. And another important factor for Swiss inflation always is also the Swiss franc. And if you look at the Swiss franc a year ago, it was only slightly above par, and now it's trading at around 110, even a bit higher. And that should actually help to increase inflation in the course of 2016. It should even get to positive territory before year end.
The decision for negative rates attracted a lot of attention in Switzerland when they were introduced in January 2015, with economists saying they were necessary as the Swiss franc was significantly overvalued and posed a difficult situation for Switzerland. Since then, the franc has seen a significant drop and has managed to maintain a much lower value. Do you believe negative interest rates will continue to work, and for how long?
Yeah, sure. Negative rates are very likely to have a weakening effect on the Swiss franc, but more important currently is probably the fact that the Eurozone is recovering well and allows also the euro to strengthen against the Swiss franc, and not really a Swiss franc weakness, but more a euro strength. And that's, of course, also on the back of the current US dollar weakness. But still, I mean, that all helps the franc to weaken against the euro. And then there is currently also the uncertainty about the Swiss National Bank intervention that keeps the franc weakening, and that's probably all more important than the negative interest rates. But again, the negative rates, I mean, as long as the ECB, the European Central Bank, keeps these measures in place, I mean, the S&B has no leeway to change its negative interest rate policy. And as long as this is the case, and that will remain for the next year or even 2 years, the Swiss rates will also remain negative. LIBOR will then be at around minus 75 basis points.
Thank you, Roland Kläger. That's all we have for today. Tune in tomorrow with Jessica Walker.